bird on a tree.
Welcome, this is Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. You can help us by choosing one of the products at the video description below. We will really appreciate that. And now I'm really happy to introduce you to Mike Zuzolo. He is the president and founder of Global Commodity Analytics. And Mike, what's really going on right now in your community of farmers? How are they being impacted by the pandemic? Mike, how are you?
Great to join you. Thank you for having me. We are starting to plant in what would be, obviously, for all of agriculture, especially row crop agriculture, one of the worst years in the last 5 or 6, and that's saying something given some of the price action we've seen up to the outbreak of the COVID, Luis. I think for us, we have been going very slowly, but the weather has permitted us to start planting corn and also planting a little bit of soybeans as the wheat has broken dormancy here. We have been on the dry side and on the warm side, and I think that's probably why we've been able to get started. I believe Kansas for the state, and as you say, I'm northwest of Kansas City. I'm actually in the northeast section of the state, right on the Missouri border, right up against the Missouri River. And we have had, I think, about 5 or 6% planted in the corn based upon USDA's numbers for the state of Kansas on their report Monday. To answer your question about the COVID, we have been very negatively impacted, as much of the central and western and eastern corn belt for that matter. Wherever there is an ethanol plant, we have been negatively impacted dramatically because of the break in the ethanol, which was led initially by the COVID and the Saudi-Russia production increases. The issue for us right now, and what I'm talking to clients about, is that we have now seen the OPEC production cut come through as of this past Sunday. However, we haven't seen prices react positively yet. In fact, crude oil made a fresh 18-year low right before we talked today. And this is in direct relationship to the ethanol prices being taken down even farther, led by the unleaded gas prices, even farther than where we were in the Great Recession. I want to say that we had about an 80-cent a gallon low in RBOB unleaded gas futures back in the 2008 low, but we've gone down to 40 cents here this time around. And so the market in the energies has already priced in a substantial worst case scenario compared to the Great Recession about 10 or 12 years ago.
Yeah, prior to our interview, I was checking some data, and I saw that ethanol consumption in the United States fell by 25% during these last few weeks. Is that accurate?
Yeah, and in fact, I would say we've fallen by about over 50% since the 1st of March. And so it has followed almost exactly the same pattern as the unleaded market. And naturally so, because the ethanol, because it has not fallen as fast as much as the unleaded, it has turned the margins upside down, where ethanol is actually premium to the unleaded gasoline and in the futures market. That's why we've seen so many ethanol plants shut. That's what's different, this beating itself, because it's actually got a premium in it versus unleaded gas. So what we need is the unleaded in the crude oil market to find short covering and to bring those margins around, which they are right now. Before we went on together, and we've come from, in the central corn belt of the United States, the ethanol margin has gone from about negative 22 cents a bushel to about a negative 10 cents a bushel just in the last few days because of this reversal and the unleaded gas moving up faster.
We are going to have a quick break and we'll be back in a few seconds. Please, in the meantime, give us a like. And so how does that exactly really impact on corn sales?
I had one client who is 61 years old in central Nebraska call me today, and it was a similar discussion that I had back in 2000 with him, or with another client, I should say. And he said, why should we even plant corn? Why don't we just turn our seed back in and just skip planting corn this year? Obviously, we're not going to do that. Obviously, we're going to plant corn, but the margins are just not there right now. And really, the only thing that is keeping us going in the U.S. agriculture sector right now is the crop insurance price that was locked in, even though it was far below what we've been used to the last several years. If you have good yields, you can still at least come out and survive for another year. And also, obviously, the MFP payments that the president has been putting out has helped our agriculture sector dramatically this year because of our negative margins. I think that the trade in the United States has been buying soy and selling corn. And in fact, the new crop, November beans versus that hit a new all-time high contract for 2020 just this week, and breaching 2.5 times in terms of November being the December corn by 2.5 times. So clearly the futures market still thinks that the soy demand is going to remain robust compared to the corn demand. And that's something that we're really wondering about here as we plant our summer crop, plant our spring crops.
Do you think that will be more related to the African swine fever in China, or more related to drought in Brazil and Argentina?
I think the market will remain negative in demand, Luis, until we see the energy markets recover. I believe that they have continued to decline in price, whether it's because of processing capacity being cut, culling and euthanized procedures taking place in our poultry flocks or in our hog production. We are still in the futures market very, very focused on demand, and it doesn't matter whether it's energy, biofuel demand, or livestock feeding demand. Supply issues are not on the front burner, as we would say. They're not a high priority right now, because I think in the United States, as far as the futures market at the mercantile exchange, continue to think that demand is falling faster than supply.
And what do you think are the real impacts of the economic downturn on commodity prices?
That's a moving target right now. So I can tell you what my research is saying to me right now at this point, as we get into the middle of April and head towards the end of April. I am very much in line with the World Trade Organization merchandise trade forecast that they just put out last week. I am telling my clients and subscribers that if we can restart the global economy before the end of April, we still have not lost our summer driving season here in the United States, and we haven't lost our summer grilling season here in the United States. These are the two most important seasonals for the demand, whether you're looking at energy or looking at red meat consumption for our country. So if we can find an avenue, a way to a better situation in the next 15 days, and we see restrictions being lifted, I think we can come back and have rallies led by a weakening dollar. And I think that's the key. That's what I'm watching the most, is if the dollar starts to go down in a trend, the market is looking at more of an inflation, a better situation developing in the world economy.
What's your projection for the U.S. corn and soybean crops?
That too is being talked about almost daily. I think that we are probably still around a 400 million bushel carryover for new crop soybeans here. That could go up depending on how quickly China will transfer from Brazil-sourced beans to U.S.-sourced beans. The expectation is that that will happen by June, July. And if that's the case, then we probably will hover around a 400 million bushel carryover, plus or minus 20 million. In the corn, it's much more difficult because the ethanol and the livestock slaughter capacity is really starting to trim our demand. USDA showed that in their report last week. I did an interview on Friday with 3 other analysts, and many of them were talking about a 3 billion bushel carryover for the United States corn for 2021. I'm not there yet, Luis. I believe that, again, if we can keep the summer driving season and the summer grilling season intact, we don't need to see that big of a number.
Yeah, one thing that could have a positive impact on prices is that the Argentinian crop of soybeans is down to 49.5 million metric tons. And the Brazilian soybean crop probably will be 120 million metric tons. That's today's projection from the Brazilian Association of Soybean Growers. I'm not. How do you analyze this?
Yeah, I don't think that those numbers are built into the Chicago Mercantile Exchange price right now. I think that the trade still thinks the supplies are going up because China is buying most of their soy from South America. I think you really need to see the Brazilian real find a low and the US dollar to find a high when it comes to the interaction between the soy futures and what the production in Brazil is. There's a disconnection there, and I think it's an exchange rate disconnection. The funds aren't going to let off of the selling pressure in soy until they see the RIA come back.
Okay, in fact, those are really recent projections, and also the Brazilian sales to China have been really strong in the first 2 weeks of April.
Yes. And I think that's mostly currency related, as opposed to we are competitive with Brazil right now, depending if we can get it out of the Pacific Northwest or not.
Okay, is there any advice would you like to add for the U.S. farmers?
I think the one thing that I continue to see is the world energy price has already taken 30% out of our global demand, just because we've gone from $60 a barrel in New York down to $20 a barrel. We've essentially priced in more like a 60 or 45 million barrel reduction versus last year's 100 million barrel per day demand that we had in 2019. So I think there is an ample discount in the energy markets right now, Luis. If we can find the dollar to depreciate against a lot of the emerging market currencies and our competitor currencies, I think that too would also help the energy sector because of the negative relationship between crude oil and the US dollar. So I think that is something that before the end of this month, along with maybe opening up the global economy a little bit more by some of the presidents and some of the leaders in the world, I'm still willing to give this market a chance to have a short covering rally.
Okay, Mike, thanks a lot, and you are very welcome to being a frequent guest of Connected Farmer.
I enjoyed it very much. Thank you for having me.